Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Thursday, May 16th, 2013. Well, quite a bearish day today. This candle has continued the series of lower highs and lower lows that we've seen in this market for quite some time now. A very, very bearish, large black-bodied candle where the sellers have closed once again with very strong control of this market. For the previous day's trading, we had potential for a change of trend. At the end of this very long first time frame downtrend, we saw this small white-bodied candle. It was a potential harami reversal pattern, and the small white body suggested that the sellers had lost quite some momentum. We saw the market find support at 98.59, which was crucial to this market, and we saw the buyers attempt to take control. The sellers certainly had lost control for the market for that previous day's trading. But what we had to look for was confirmation of a change of trend. So that made the high of that candle very, very important. If we look at this market, it didn't really trade near the high of that candle, and then sold off for most of the trading day. Opened up towards the high and near that previous close, obviously around 99, and then sold off in a major way. This bearish close down below the important 98.59 level really does say something about the weakness in this market at the moment. With this close down below there and the solid bearish close, it does suggest that there is solid potential for this market to trade down to 96.62, and that's the thing that we quite often see with the Aussie dollar, and we do see it with currencies from time to time, but the Aussie dollar seems to be notorious for it, that when you do end up with these sell-offs, they tend to be very dramatic. And here, as we see this current candle developing, trading at its lows at the moment, lower high, lower low, black body candle, and good potential for the market to trade lower. So we still have now, with this current candle as it's trading, confirmation of a continuation of the trend to the downside. Now for this current candle, the 98.59 level has potential to offer itself as resistance if we do see buyers coming back into this market. So let's be aware of that. Now in terms of the Fibonacci extension, and we saw this indecisive trading around the 261.8% level previously, that was at 98.95, did set the market up for potential change of trend, but we saw no strength coming into the market. There was no follow through from the buyers. The buyers were certainly weak in that market because it was a spinning top type candle, but the sellers had lost a lot of that power that they had previous to that candle. But we haven't seen any strength from the buyers to change that trend. So this trend has continued down through that level, and this suggests that the 423.6% level is our target, down at 96.31. And along a similar vein with the Fibonacci retracement, we're in an expansive mode of that. We're trading in a strongly bearish manner down through the 423.6% level. It really tells us something about how bearish this market is. Our target is the 685.4% level. Quite rare for markets to get down to those levels, but boy, it really says something about the weakness. And our target there is 96.30. So that coincides with the other Fibonacci technique and an area of potentially strong support down around that level. So obviously, in terms of Ichimoku, a bearish market in all three time frames. We had some time ago a sell signal with Ichimoku. We had this bearish breakout down below the cloud at 102.76, and then we saw the market continue trending down. The market was trading down below all of the Ichimoku indicators, so a very, very good signal with the Ichimoku charts here. At the moment, we're trading below the cloud, below the Kijins and the pink line, and the Tenkins and the green line. So we're bearish in the long term, the medium term, and the fast term time frames. The Chica span is below the corresponding price action and well below, so it's confirming the negativity that we're seeing in this market. But as I've mentioned previously, this market is looking very, very overextended. We are trading a long way away from the cloud and each of the Ichimoku indicators, and it wouldn't surprise very soon for this market to try to bounce back towards equilibrium. And there is potential that when we do see that bounce back, that it could be quite volatile, and there could be a possibility that if this market can have a successful test above 98.59 in a bullish manner, we could quickly see the market testing to the $1 level, the round number psychological level. But there is a good possibility of that area holding as very, very strong resistance to this market. If we do trade up there, there's no guarantee that we could see the market trading up to that level. Just above there we have the Tenkan-sen trading, so that's the first area that we should be looking for very strong resistance, and that strengthens that $1 round number level as well. So a bearish market in all three time frames. Our target is down around this 96 level, 96.62, 96.30, based on the Fibonacci techniques. At the moment, the way this market's trading, it certainly is looking as though there is a good probability of the market trading down to those levels. So we have the sellers in total control of this market. The buyers really aren't coming back into this market at the moment. There isn't any sign of that happening, and there is good potential for the market to test down to these lower levels.